All right, thanks for joining me. In today's video, I want to share with you something that most people do wrong when they're trading vertical spreads. It's not something most people are aware of, but it's just the human nature that we're just lazy about putting on trades. So I want to show you kind of a little bit of a different approach to doing it. If you want to join me in working together, you can check out the website tradersfly.com. And also there's links in the description. And if you want to work with me, you can go ahead and learn to trade options and trade verticals and all kinds of things. I work with people for 2 months, 3 months, 6 months, 9 months, many different other things on there. So you can also check out some of the courses if you like to do things on your own as well. Okay, let's get started. I want to show you what a lot of people do versus what we want to do. So when we look at what we want to do, we want to spread out our verticals. So if you look at this, we've got verticals here. I've got a vertical here. I got a vertical here. You know, that's kind of the smart approach. You see I got one. I'm, looking at capitalizing from the ones. Now, what a lot of people do here is when they go in and trade a stock, like let's say we're going to trade NVIDIA stock, they go ahead and let's say, oh, okay, I want to do a 30-day trade on NVIDIA. I want to sell some puts. I'm going to go to a certain delta. This is the delta I pick. This is my amazing delta. And I will go ahead and sell this vertical. So we're going to go in and let me zoom back out. And we're going to go in and sell this vertical right here. Go here, here. I've got this vertical. And now what I'm going to do is take this vertical and I'm going to go ahead and load it up with 5 contracts. Okay. It could be 10, it could be 20, it could be 100. Doesn't matter at this point. My point is you're loading it all up, 5 contracts at this exact strikes. Okay. You're loading up your position at this exact strikes. So any risks that you incur, it's all going to come right here. So as this comes down, all the risk is concentrated here. Whereas really when you go in and you want to do it, I want to spread out my capital. So I got a little bit of capital here spread out at the 135s and the 140s and the 130s, 140s, 120s, 125, 110, 115. So I got it all spread out all over the place. And that way, if this starts to go against me, cool, I'll take some profits off of this one. If it continues to go against me, okay, maybe I'll take a little bit of a loss on this one. Okay, if it continues to go against me, I've got this one really wide. So I've got spread out. So why would I trade and put everything in one spot? Okay, think of it like this. Do you put a money jar, if you have a money jar, but pretend you do, if you don't, you have a money jar on your counter. Do you put all your money that you have in that money jar? No, you probably have some in the bank. You probably have some assets. You probably have some stock. No, because in the movies, everybody comes in, they take the money jar, and now we've got a whole big movie that we can make out of it. So instead, put $1 in your sock, put $1 in the attic, put $1 in the basement, put $1 in the car. Now somebody comes in, tries to take all your money. I mean, just for you to take out all that money, it's going to take you 5 or 10 days to find every single dollar bill. So for a robber, man, they're not going to be quick enough. So anyway, that's the point. Spread your risk, spread your money. Most people don't get it. It takes time to really understand this concept. If you want to work together, check out the tradersfly.com website. I'll work with you. And we can do a one-on-one session, or we can work together for multiple months as well, which is usually what I do. Is I take people from the start all the way more towards intermediate to advanced trading. So, all right, thanks for joining me. Hope to see you soon. Take care.